You're listening to The Intellectual Investor, episode number 95, Investing for Beginners Interview, Part 1. To learn more about Vitaliy's investing firm, IMA, go to imausa.com. Investing for Beginners Interview, Part 1. It was a pleasure to talk to Andrew Sather and Dave Ahern on the Investing for Beginners podcast. In Part 1 of a two-part series, we discuss how coronavirus has impacted IMA's investing, the USD as reserve currency, our investment in defense stocks, and the role that macroeconomics plays in investing today. Enjoy.
All right, folks, so welcome to Investing for Beginners podcast. This is episode 164. Tonight we have a special guest. We have Vitaliy Katsenelson with us. He is the founder and blog writer of one of my favorite blogs, The Contrarian Edge, and he writes some fantastic stuff. He's also an investor, a very smart investor, and we're going to go and chat with him. We had him on a while back, and he's graced us with his presence again, so we're really appreciate Vitaliy taking the time to come talk to us again. So thank you, Vitaliy, and welcome back to the show.
Well, guys, thank you very much, Andrew and Dave. Congratulations on 163 podcasts. That's a lot of podcasts. So,
yeah, thanks.
Yeah, we're getting up there in age now.
Yeah.
Hopefully a tiny bit wiser. So, Vitaliy, last time we had you on the show, since then we've obviously had the coronavirus and a lot of change through that. Recently, we've had a devaluation of the dollar. Very recently, actually, in the past month or so. I guess a lot of things to talk about. How have you been dealing with the past, let's say, 6 months compared to where we were about a year ago when we talked to you?
Yeah, no, for a very, very long time, I was not a big believer in kind of owning gold, and there are a lot of good reasons for that, because it's kind of unproductive asset that sits there in a vault or safe and shines and doesn't really do anything. But as I look at the United States, I can see how United States has been basically given this privilege of having a reserve currency. And we earned that privilege because, we are a country surrounded by two oceans. We have a kind of a very polite neighbor in the north and a kind of a fun neighbor in the south. And, it's the largest democracy, at least by GDP, in the world. We have a very strong economy. We have a, very stable political system. And, in addition to that, we have a lot of natural resources, which kind of, allows us to be kind of self-sustained for the most part. So it's a very, so there are a lot of geographical and political advantages that gave us this privilege of having, a reserve currency. But at the same time, if you look what happened to our economy over the last 20 years, in 2000, our debt to GDP was 30%. In 2008, it got to 60%. Before COVID, end of last year, we crossed 100. And just realize that at the end of last year, in 2019, EU's debt to GDP was 86%. So for a long time, we looked at Europe and basically said, well, these socialists, they're borrowing too much money, they're spending the money they don't have. And then last year, we had more debt per GDP than Europe. Then if you look at our debt to GDP today, this year, we're most likely going to exit with 120 to 130% debt to GDP. Our spending as a percent of the economy on COVID, kind of on trying to keep economy afloat, is basically 2 times more than EU or big countries in EU. I think it's 3 or 4 times more than Japan and other countries. So we are basically, the reason I'm making this point is that if you look at the US dollar probably going to continue to be the reserve currency just because there are no good contenders for that, with US dollar. But at the same time, I can see how is becoming less and less attractive currency overall. So, so I feel like, so there are two things we've done in our portfolio. First of all, we own more foreign stocks, and foreign mean basically in Europe. That would benefit in US dollar terms if dollar gets weaker. And second of all, for the first time ever, we bought gold. Gold is just a position in the portfolio. We don't have a 30% position. It's a small position, but for the first time ever, we bought gold. So, and gold also is a play that not just the dollar gets debased, but all currency gets debased. So, in other words, the dollar, even if the dollar does not decline against euro or other currencies, the gold prices would go up in absolute terms because because there's a kind of race to the bottom for all currencies, more or less.
Yeah, I mean, all the currencies are staying relative to each other, and if they're all generally devaluing, it could, in theory, go on forever, whereas gold, there's only a certain amount of gold on the planet. So, a commodity like gold could store value. Other commodities could also fall into that bucket as well.
Sure.
And maybe it's something we look into more than, let's say, 5 or 10 years ago.
Yeah, and I think I think that's a very good distinction. So what makes gold slightly more special than other commodities is that, for the most part, it's not used for industrial uses, right? So let me just give you an example. Oil, like in theory, oil should benefit from weaker dollar in general. The oil price should go up, but there is also another dynamic there, which is supply and demand, right? And supply, I can definitely see scenarios where the demand declines and supply stays the same, etc. Do you see what I mean? Gold doesn't have that. Gold is basically, people just look at it as store value, and that's why when they sell, when they get out of US dollar or euros, they buy, they just park their money there. That's the distinction between gold and industrial commodities. So, like, I'll give an example. So, if say Chinese economy goes through severe correction, demand for iron ore will decline. Just as an example, right? So, even though iron ore in theory should benefit from debasement of currencies, there would be other factors that could influence its price substantially.
It's more of a pure play.
Exactly.
Yeah, that's a good point. I think for somebody like you to take a small hedging position in gold, to me, it's significant. Maybe people who aren't aware of you and your philosophy aren't aware of like how big of a move that is. So, is there a point where, let's say, spending versus GDP gets to an even higher level? Is that at a point where you look at going from a small position that it's at now to possibly going to a bigger position in gold? Or is it something you're just constantly evaluating? How do you look at that moving forward?
You know what? I'm not there yet. I mean, this is for us, it was such a big decision to begin with philosophically. Like, I don't know. Honestly, I just really don't know yet. But we have been if I look at the world today, it is a lot less stable now than it has been over the last 20 or 30 years. Since the Cold War, at least last 30 years, right? And so another group of companies we've been buying, kind of defense companies, and just because I feel, there are some opportunities where we can basically, I feel they're asymmetric risk, they're symmetrically priced. In other words, if things continue, if in the worst case scenario, we're going to make some money and not going to lose money because the way they're priced, there is high probability that, especially European defense stocks, as United States creates this vacuum in the world, the European company is going to have, European country is going to have to be spending more and more money on defense, which would actually benefit these companies. So, that creates a tailwind, for them. And in the another tail of that, if there is a some kind of armed conflict, of substance. And and this is not wishful thinking on my part, trust me. I really hope it doesn't come to that. But in that case, these companies become a hedge in our portfolio against that. So, and just to make just to clarify this point, I am not a macro investor at all. But, I think, this is a time where you have to have you can't really bury your head in the sand and kind of assume everything will be, that everything will be stable forever. And I think so. I'm not a macro investor at all. So, but we are starting to make changes in our portfolio just for these risks that now kind of we can see rising, more and more day after day.
It's funny you mentioned that because I've been doing something similar pretty much ever since COVID hit. You don't, like you said, want to make the macro completely guide your decision making. It's about the companies and the businesses and the cash flows and the dividends and all of those things. But it seems like, and this, I'm asking maybe from a selfish perspective because I'm curious to how you're looking at it now. It seems to me like there's a lot of events going on. You mentioned the EU needing to build up an army. I know the US just pulled out some troops from Germany as an example. You have China doing all their things to piss off pretty much everybody, not just the United States. And so as it comes to, do you find yourself spending a larger proportion of time following news that you think would be relevant to your investments than you did in the past versus like a balance of, reading annual reports and how are you thinking about that these days?
Yeah. So this virus was a wake up call for me. And let me tell you from which perspective. I remember like early January, maybe sometime in January, I forget when it was. I was kind of paying a close attention to what's going on in China with the virus. And I remember thinking, well, this is China problem. I mean, I need to figure out how it's going to impact us. But this is a China problem because these things don't happen in the United States. Like this is, and that is such an arrogant way of thinking. And by the way, this is me thinking this. And then I realized, like now that I look at this thought and I realize that is a very arrogant, right? And that arrogance, had a plenty of, kind of fruitful ground for that because, like, guess what? Like, bad things haven't happened here for a long, long time, right? They happen some other places, but not in the United States. And now I realize that, and so now I realize, well, I need to kind of not to be involved in a wishful thinking, like I don't want bad things to happen in the United States. I need to be more open-minded and say, okay, well, what bad things could happen now? So it's kind of opened up my mind a little bit more than I guess in hindsight, I was more close-minded than I thought I was. And so, yes, I mean, and if you were a Martian, and this is, I really don't want to get political and I won't, but if you're a Martian and you land and you kind of look about what's happening in the world today, and you look at the United States behavior over the last, 3 or 4 years, you can definitely see that we are, I think from geopolitical perspective, we are less, we became more volatile from geopolitical perspective and less predictable. And we are more entrenching. We kind of, we are not trying to be the world leader anymore, and we are entrenching. And that means that, and also if you think about it, what's also happening is that, and that's kind of becoming evident, self-evident almost every day, kind of the globalization is kind of coming to an end, right? Now, now countries are, the global trade is, is probably shrinking now, like the direction of it at least, is going the other way. And that is actually, by definition, almost to leads more global political instability. Because when you trade with somebody, you're kind of, joining the hip. once you stop trading with that country, or you start doing less and less of that, it becomes us, versus them a lot more. And that means just the world is becoming less and less stable. So that's so to answer your question, yes, I've been thinking a lot more about geopolitics over the last months, and so, and yes.
Yeah, Dave, what about you? I know I think the past month or two on the podcast, I've probably talked about geopolitics a little more than I have in the whole history of the podcast combined. How are you feeling about this? I know we try to avoid it as much as we can, right?
Yeah, we do. But I think it's just natural with all the things that Vitaliy was pointing out. I think it's completely natural to focus on more of this before. And I think what Vitaliy was saying was right on the mark. And as the supply chains were disrupted early on with what was happening in China, I think that really kind of opened my eyes, like, wow, we really do depend on other countries far more than you really think we do. And how is that good or bad? And what are the impacts of that? And like Vitaliy was saying, I think that's right on the mark. As far as we trying to pull back from other countries, that's going to cause more frustration and anger from those other countries because they depend on our money as much as we depend on their products. And I think that definitely leads to more instability. And I worry that we go back to the protectionism era of the 1930s and 40s before World War II. And that was, America was very much an isolationist type country at that time before we got involved in World War II and everything that happened after that. I wonder if that is a trend that we're going to, and not to get political, but I wonder if this upcoming election and elections after that, if that direction will change.
And I want to point something. So there's three of us on this call, and three of us dancing, doing this very interesting dance because none of us want to touch politics. No, but I think,
Yeah.
but there is but I think I want you to think about something for a second. There is a very good reason for that, because the politics became so toxic in the United States. Like the second you state your position about your politics, it's basically the person on the end stop listening.
Yes.
And because it became incredibly kind of in a primitive level tribal, like in the and that also tells you about kind of the one thing is also that kind of worries me about the United States, and also everybody else outside the United States can see this too, is that the social fabric of our society is kind of breaking, is breaking as well. And so that's another reason why kind of we want to hedge against US dollar, because remember the political stability, is I don't think we're going to stop being a democracy anytime soon, but we'll become a little bit less of a democracy. Like, I don't know if you can be a little bit less of a democracy. It's like, I don't know. It's like, I don't know if it falls in the same category as like being a little bit pregnant kind of thing. Like, I don't know if you can become less of a democracy, but we are like I would argue we are less. The social fabric of society is a lot more strained today than it was. I don't know how far back you want to go. 4 years, 8 years, 12 years, 20 years.
Yeah, I think it's been an evolution. And I think one of the things that I've been thinking about a lot recently is I think the strength of our country for many, many years was our ability to compromise and work through problems from both sides of the aisle. And I think there has, over the last, I would say maybe 10 years or so, there has been a shift towards extremism on both sides. And I'm not saying both are right or wrong. I just have noticed a lot more people are a lot stronger in their opinions, and they're a lot stronger in my opinion is the right way and anybody else is wrong. And that's the only way that we can go about doing it. And I think if you look at the history of our country, it has never performed best that way. And even going back to the beginning of this whole episode with COVID, and you think about the political parties being able to come together at that time and get a relief package done as quickly as they did was kind of cool because it was something we haven't seen in such a long time. And without casting blame on either side, I just think that there has been such a division of views and thought points. And you can see it on your social media, whoever you are, you can see the divisions, and it's so rampant. And I just think that for me personally, as we get farther down the road, I think figuring out a way that we can all work together is going to be the better way for our country to go. And not just for us personally, but just for every place in the world as well, because our country has lent some more stability to the world, over the last 40 or 50 years than we had experienced prior to that. So I just think that that's something to, I guess, consider.
Well, anyway, and just so none of us want to go into politics, and the only point I'm trying to make is this: that's all those things are like, so we are hedging against U.S. dollar declining, and these are the reasons for that. Like everything we talked about, that is why we're doing it, because that is all of those things are not positive for the U.S. dollar. That's all.
Thank you for listening. This and other investment articles by Vitaliy Katsenelson are based on value investing principles that were first brought down from the mountain by Benjamin Graham and later were popularized by Warren Buffett. To learn more about these principles, visit investor.fm and listen to the first episode of this podcast titled The 6 Commandments of Value Investing. To learn more about how Vitaliy's investment firm uses these principles to create low-risk, long-term oriented portfolios, visit imausa.com. Enjoy life and prosper.